Hi guys, I thought I'd make this quick video just with what's happening in the market. I know we're going through something that's unprecedented, and whilst something like this has happened in the past, the coronavirus is certainly something that's affecting markets in a way we haven't seen before. We've had some returns overnight, or sorry, some losses overnight. That's one of the worst that we've seen in the market, in the American markets, and we don't know the flow-on effect that it's going to have in Australian markets. So while things are quite volatile at the moment, it's not a reason to change any of your investments, because what we see now is that if we are changing any of your investments, we're crystallizing those losses. And I just want to take you through a few things just to, I guess, give you a bit of reassurance about what's happening in your portfolio, and why we focused more on the long-term goals as opposed to what's happening in the short term. I think at this point in time, it's all about, I guess, making sure that your cash flow is right, making sure that you've got savings available, as we don't know if you are going to be quarantined, if you have to stay at home, how long that cash flow is going to need to last you. But if we look at some charts I wanted to go through with you, we can see that in the past, and I've sent through some emails previously, that if we look at some epidemics that have happened over time, like SARS, swine flu, Ebola, we can see that if you look at the returns after those time periods, so say, for example, the SARS epidemic, 6 months returns were 32.6% after the virus. Swine flu, 43.6% 6 months later, 1 year. So whilst there is a downward trend at the moment, once there is there is a cure, or we get a vaccine, or markets start to pick up, we could have a sharp increase in markets. So we can see here that the market is quite low over the last 24 hours in the ASX. But if we take that out to, say, 5 years, we can see that there are some sharp ups and downs in the market. And this is where, if you are doing salary sacrifice contributions or making extra contributions to your account, you can start taking advantage of these peaks in the market or these downward trends, because what you're doing is you're basically dollar cost averaging. So we've talked about this in our meetings, but dollar cost averaging is I guess, looking at how you can spread out your investment and take advantage of fluctuations in the market. So for example, if you had $8,000 and you were to invest in the market and put it as a one lump sum payment, and you bought that unit or that share price at $10, but over that yearly period, that price fluctuated by going up to $14, going down to $9, going at different points in time. Now, if you spread that investment over a few months, that return would be 4.7% as opposed to 0% if at the end of that 12-month period or that 8-month period, the unit price was back to $10. So this is a time where, if unit prices are going low, this is the time to make those salary sacrifice contributions. If you've got money that you want to invest in, say, your own personal trading portfolio, this is the time to be able to do that. But in saying that, this is a long-term strategy. If you need access to the funds in the short term, I guess we'll be having a different conversation, but I'll be touching base with all clients over this period. And if you feel like you need to go anything through your specific portfolio, don't hesitate to give me a call. But like I said, we don't know what end we have to this current market. At the same time, there's a lot of restrictions going on around worldwide, and that's released on an hourly or daily basis. But like I said, focus on the long-term strategy. If you have any queries, any questions that you want to go through, don't hesitate to give me a call. I'm happy to have any discussions with you over the phone. Thanks, guys.